Welcome back to the Living in Hawaii channel. My name is Ryan Strong, a local real estate agent here in Hawaii. And today I am also with Ridge Nelson, our partner here on the Living in Hawaii team. Ridge.
Hey guys, my name is Ridge Nelson and I'm a local mortgage broker here on Oahu.
And today we are going to be talking about using your VA home loan when PCSing to Hawaii to purchase a home. And this happens so much, and we do so much VA loans and helping veterans and active duty military service members purchase a home when they do make that transition out to Hawaii. So in this video, we're going to break down several different things that are super important that you need to know when it comes to using your VA home loan in Hawaii. Number one on our list is that using your VA home loan to purchase a home in Hawaii is actually one of the best opportunities that you will have to purchase a home, pending qualifications, of course. But again, as I come here on my board here and I get this one up here, it's one of the absolute best opportunities in the United States, all right, to purchase a home using your VA loan, okay? And now I'm going to get into why here, all right? And that is because of the Hawaii real estate market, okay? Number one, destination, okay? A lot of people are coming and going, all right? But a lot of people love Hawaii, all right? Number two, all the other military installations that are on there, which is a very, Oahu specifically, very heavy military community. So if you decided to buy your home, all right, and then you hold it, okay, what I mean by hold it is you don't sell it, you hold it, and then you rent it out, okay? There are plenty of military that come and they do not end up purchasing, but they will rent, and they'll try to rent probably most likely within their BAH, okay, which we'll talk about. Okay, so it's a great opportunity if you want to start building a real estate portfolio. One of the other things, if you did want to buy, all right, while you're on your way there, and then you end up wanting to sell, okay, when you leave, because you maybe think that this is a headache and you don't want to have to deal with this, Hawaii is what is deemed or considered to be an equity state, all right, an equity state, okay? So what do I mean by that? Typically speaking, all right, over the last 30 years, homes have appreciated annually about close to 5%. So we're just going to write 5% up here. And what does that mean? That means that if you purchased a home, let's say you purchased a $500,000 home in the next year, typically speaking, and this is what data has shown over the last 30 years, is that homes are appreciating around 5% annually. That could be more, all right? It could be less. All of that is market dependent, but this is what we're talking about when we're talking about it being an equity state. Now, there is some data, again, because things were absolutely nuts over the last couple of years, and certain areas, we saw average prices increase upwards of 20%, okay? Upwards of 20%. So again, this all fluctuates, but this is one of the other reasons why it could be one of the best opportunities for you as a military service member to be able to use your VA home loan benefit to purchase a home in Hawaii. Let's go ahead and get into number two. Number two, and this is something we want to make sure that we have a clear understanding of, is what does the zero down requirement mean? $0 down requirement mean? And Ridge is going to break this down into further details so that you have a great understanding of what this means. It sounds simple, but some people have this imagination of what this can lead to. So we want to make sure that we are clear about this.
So first off, let's start with the VA loan. It is a zero down loan product or 100% loan to value ratio, right? So this just means that if you have a free VA entitlement, if you've either never used it or you have used it in the past, but you've either sold that home or refinanced it to another type of loan product, you're good to go to get a VA loan with no money down of the value for whatever you qualify for, right? Now, some other things here to consider whenever we're talking about money or cash to close or really funds to be used for a transaction. There are closing costs associated with every real estate transaction. That doesn't necessarily mean you need them depending on your specifics with your situation and how you're purchasing that home. We're going to get to that more, but just know with a free entitlement, there is no down payment requirement. There used to be a down payment requirement prior to January 2020. After January 2020, that went away. So if you qualify for a VA loan, you can get that VA loan with no money down, assuming you have free entitlement.
So like you said, this entitlement is actually the key thing here in understanding. Obviously, if this is your first time using your VA loan, then you're going to have free entitlement for the most part, right? You should actually have it. But if you're trying to use it again, second time, third time, fourth time, this is where things can play a factor in. Do you need to bring money down to the table, all right, in order to purchase that home? If you still have a home that is on your VA entitlement, then you may be required to put some money down. Let's go ahead and move into the next one. Next on our list is what has changed with the VA home loan, if anything. All right. But before we talk about that, we are going to talk about BAH rates briefly. All right. Now, this varies again state to state and things like that. But in Hawaii specifically, all right, they have increased. Okay. So BAH rates have gone up. Why am I bringing up BAH rates if we're talking about the VA home loan? Well, this is something that could play a factor into your qualification. Okay. When those rates go up, depending on time in service, dependents, all right, you're going to also have COLA. All right, these things can play a factor into your qualification, okay? But diving in further, let's talk about some of the other things going on with the housing market, all right? So when we're talking about this, we got the BAH rates again. These play a factor into qualification, all right? Understanding what you may be making monthly, which you won't actually know until you see your official LES, okay? But that's not to say that you have to be there, all right, prior, okay? Now, when we talked about the market, okay, what kind of market are we in right now? All right. This is going to change all the time. Market always changes. All right. 2020, nobody knew. And then it got nuts. All right. 2021, the whole year was nuts. Sellers market the entire time. All right. And then 2022, beginning of the year, still sellers. And then things started to shift. Now, at the time of this recording in February of 2023, we are basically in what we are now looking at as the buyer's market. Okay. And it's actually kind of a weird spot where we're at right now because of interest rates, which again, all this stuff, it changes daily. All right. And that's exactly why you need to reach out to us with that number and email right there on the screen. However you're comfortable. It's also down in the description below if you want to go ahead and jot that down. Text us after you're done watching this video. But understanding where we're at. So interest rates a little bit high right now, which has then decreased this buyer's pool. So the buyer's pool in a buyer's market typically look like this, all right? And they have buyers are known to have the advantage in a buyer's market. Comes to leveraging your offer, okay? But because of the higher interest rates, okay, what we're seeing is the buyer's pool has shrunk. People may be waiting, they may be on the fence, or they just don't want to incur a 6% interest rate, all right? Something like that. It all varies, okay? But the pool has shrunk. But what we are seeing along with this arrow, all right, is more homes hitting the market. So when we have inventory, this is all old school economics, supply and demand. All right. So supply, the house, okay, we're having more homes on the market. There's our supply. All right. Where's the demand? Okay. Our demand isn't quite there yet because the pool has shrunk. All right. We're all in this kiddie pool of buyers. Okay. And that's what we need to understand. So how does this play a factor when you're shopping? Okay. When you're shopping and you see a home that has been sitting on the market for 50 days, that doesn't necessarily mean something's wrong with the home. All right. It could just mean that, hey, look, there's just not a buyer ready for this house. Okay. It could be the rates. It could be a number of factors. All right. So understanding the market. Okay. So has anything really changed with the VA home loan? Not entirely. Okay. But there are some other things that you do need to understand. And previously, there were some things that the veteran, okay, active duty, military, retired, either way, could not pay for. Okay. What do I mean by that? They could not pay for that. So when you are in escrow, okay, you have acceptance on an offer and you have moved into escrow, there were some certain things that a veteran could not pay for. Okay. One of those being a broker charge fee, for instance. Actually, when I was using my VA loan benefit, all right, to purchase a home, the broker had a fee and it was over $500 that I was actually not allowed to pay. Okay. Now, what are some other things that may have been in there? So previously, termite inspections are required for VA home loans. Previously, the buyer, such as yourself, the veteran purchasing the home, could not pay for the termite inspection. That is no longer the case, okay? And the buyer is now allowed to pay for that. One of the other ones that a buyer is not allowed to pay for, so this one is, yes, you are, okay? Now, if you can put that cost on the seller, that's something we'll definitely try to leverage, but is HOA documents, okay? Homeowners Association documents is a big one. So in Hawaii, there are HOAs everywhere, all right? They're kind of hard to avoid. There are communities without them, but they are kind of hard to avoid, but guaranteed, especially if you're purchasing a condo or a townhome, okay? HOA documents, okay? These documents can vary in price, but we typically estimate anywhere from $400 to $500. And that is a cost that the seller incurs because you were not allowed to pay for this, okay? In these documents, you get these documents so that way you get the covenants, codes, restrictions, You get what's called the RR 105C, which is their statement that has all of their financials on it. You can see how much they have in reserves. We can also see their meeting minutes, see what they've been talking about in the board meetings, if they have any upcoming assessments, things like that. So there are some things that you could and could not pay for, and you need to be on the lookout for these when it comes to what has changed with the VA home loan, if anything. Not a lot has, but certain things do here and there. So let's go ahead and move into the next one. Next on our list is we need to make sure that you are aware that are still costs to purchase a home. So we went over what the zero down requirement means, and Ridge hit on this earlier, but there are still costs to purchase a home. It is a transaction and there are still costs, and Ridge is actually going to break down those costs for you right now.
Absolutely. So with every real estate transaction, there are still costs associated with closing that transaction. I generally break those down into 4 categories of costs. The first category is going to be the loan product. In this case, that's the VA loan, the funding fee. If you are exempt from the funding fee, this one's not applicable, disregard. If you're not exempt from the funding fee, then it's going to either be 2.3% for first-time use, 3.6% for subsequent use, or if you're doing a down payment of 5%, it's going to be 1.65%. And then a down payment of 10% or greater, it's going to be 1.4%. I know that was a lot. Don't worry about calculating that. That's what I'm here for, is to help you figure that stuff out. Just understand there is a VA funding fee that's added on to your total loan amount that's financed. The vast majority of VA loans finance that funding fee into the loan amount. Second bucket of cost are lender fees. The lender fees, the main one here is origination. Understanding what this is and if the lender is charging it is important. Sometimes lenders don't charge origination, like big retail lenders, for example, but the rate is a point or 2 points higher than whatever the other option may be, right? So really understanding what the cost that the lender is charging you, if there is a cost. And then if there's not a cost, take a look at the rate, because it's probably baked into the rate. So understanding that. Now, buckets 3 and 4 cost are last pieces that are really pretty standard and are going to be what they are no matter who's buying them. Your third-party fees and then your prepaids. So your third-party fees are your title fees paid to the title company. So title insurance, settlement fee, your recording fee paid to the state, appraisal, credit report fee. Those are really the main ones here that you're going to have when you're considering your third-party fees. Now, the fourth bucket of cost or category of cost are your prepaids. So these are your prepaid taxes, insurance, interest, association fees if you're buying a condo or townhome, and then the funding of your initial escrow account. These are going to fluctuate depending on when you close in the month, how much your loan amount is, what your interest rate is, what type of property it is, the insurance that you decide to select, because you as a homeowner, you're selecting what kind of hazard insurance you're going to have. Do I want Geico? Do I want Liberty Mutual? Do I want Allstate? Those are decisions you're going to make. There's going to be slight variations in there, but in general, mostly what you're considering as far as your closing costs with a VA loan in Hawaii are your category 3 and your category 4 of costs, third-party fees and prepaids. These generally are about 1.5% of the purchase price. There's different factors that are going to scale up or down, such as if you've got no HOA or very small HOA, or you're closing at the end of the month, that would significantly decrease your prepaid interest. But as a rule of thumb, if you're trying to figure out about what these are going to be, use 1.5% of the purchase price, and that's going to give you an approximate range of what you should be looking at as far as closing costs go. Now, with that, definitely it's important that you speak with your realtor and your lender, and they go through this and you're like, hey, what am I looking at on this specific property? Can you give me an estimate on there? They're going to look at all those factors I just talked about and give you an idea. And then they're also going to help you figure out a strategy. Maybe you have the money, but you're not looking at bringing that in because you've got that money earmarked to buy a new couch or go on a vacation with your family somewhere. Maybe the home supports getting a seller credit to use to cover down on those closing costs and then buy down the rate, or maybe it's a 2-1 temporary buy down. There's a lot of different things that you can do, but just the takeaway here is understand there are costs associated with closing the transaction. And a good mortgage professional and real estate professional will help you figure out the best strategy for you to get to closing with that.
So that's exactly why we talked about zero down first, because people hear that and then they start shopping and they're thinking, I don't have to bring any money to the table. That is not always the case. All right. There are closing costs associated with a transaction, and making sure that you have money prepared, money in reserves, typically speaking, to make sure that you are prepared for any closing costs that may arise. Okay. And again, these fluctuate, but a good gauge, like he said, 1.5% of the purchase price. So when you're looking at homes on whatever your favorite search engine is, Zillow, my website, Realtor, whatever it might be, all right, and you see that purchase price, you know, okay, zero money down is like, that's the requirement. I don't necessarily have to bring money to the table when it comes for down payment. All right. But that's not the case with closing costs. So go ahead and do the 1.5% with the purchase price there. And that'll give you a roundabout idea of what you should be expecting when you get to the closing table. All right. Super important there. Because again, this just gets misconstrued of I don't need any money because I'm a veteran to purchase a home. And that is not necessarily true. So that's exactly why you need to reach out to us. There's a number right there on the screen. All right, email as well, however you're comfortable. We got your back when it comes to PCS in Hawaii and using your VA home loan. Our team is ready to help you. We got tons of other videos on this channel about the communities. If you're trying to find the right community for you, we've got all of those on this channel, vlog tours, everything that you need about all those channels. And we'll see you guys in the next one.